Hello friends, welcome to Nirmal Bang. I am Piyush Jain and today we are bringing to you another corporate conversation, a new IPO. This time we're talking about financial services sector IPO. NBSC, which has been making its name over the last 3-4 years, has been growing very strongly in the MSME space. And we all know again that there are a lot of companies who have come to the bourses. They basically have created wealth in this space. And today we are talking about another such name. The name of the company is SBFC Finance Limited. And today we are being joined by Mr. Narayan Barasia, the Chief Financial Officer of the company, and Mr. Pankaj Podar, the CRO of the company. Gentlemen, welcome to the show.
Thank you.
So, Narayanji, let's first start with you. Uh, why the IPO at this time? And number two, why at this stage?
So, Piyush, there's no right or wrong time for IPO. It is a first phase in the organization journey. We are a capital guzzler, right? So every money we lend is every money we need, a capital and a debt. So equity, in a way, precedes the debt raising. And so we thought that while we move into the next level of journey, it may be important to raise the capital now.
Absolutely. To the raw material is money for your business. The more the money, the more the lending. The more the lending, more the margins, more the profits, and then more lending. So it's all about the leverage. That's how the finance business works. So now let's talk about some basic numbers about the IPO. Then we'll start going into business model. As far as what the IPO basically dates are being announced, it is opening on August 3, closing on August 7. There is a fresh issue of 600 CR previously, and also then there is a offer for sale of 425 CR. So overall, again, we are talking about a tad more than 1000 CR. Already 150 CR basically has been placed to an investor. So my next question perhaps would be that 600 CR, I think for our viewers, they would be thinking with this perhaps is this something which you're going to require every year, or with this 600 CR, next 2 years of lending and growth basically is now going to get funded?
So from a you talked about debt equity ratio, the leverage. So from a debt equity point of view, we are very comfortable even today at 2.5 times. Post the equity raise, the debt equity obviously comes down. So it actually provides us a good runway of growth. From a banking covenant point of view, financial covenant point of view, which we have been given to all the lenders, we the debt equity of 5 is actually allowed. But debt equity is also a function of market dynamics, right? So some point of time way back, a high debt equity was allowed by the market. Now, post some of the episodes which has happened over the last 4-5 years, the market has become a little bit conservative when it comes to leverage. But these are all cyclicals, and as we go along to the future, if the cycles improve, the market will accept a high leverage. But from a financial covenant point of view, a high leverage is acceptable. So I think cutting the discussion short, we believe this capital raise is good for a few years from now. We don't have to do capital raise every year. We don't have to necessarily do it.
Yes, so I was largely focused on the growth part only because for NBSCs and banks, raising capital is a norm. It's like very normal. Like you want to lend more, you're going to actually raise capital. But looking at the last year numbers, Narayanji, and then I'll come to Pankajji later. Looking at the last year numbers, how has been the disbursal growth? What sort of great growth actually you have seen? Which pockets you largely basically served from the customer perspective?
So I will give a brief on this, and then Pankaj will take this question again in much more deeper. So I think the sector into which we are is between 5 lakhs and 30 lakhs ticket size. This sector is very large. So the whole overall MSME for to start with is about 30% of GDP, right? So it's a very large sector. If the country is going to do well, which is just doing already, and let's say the GDP grows by about 5, 6, 6.5, 7%, obviously the MSME sector is going to grow at a faster pace than the growth of GDP. So, and the sector in which we are between 5 and 30 lakhs is a good sector which doesn't compete with the banks so much. Banks are generally in a larger ticket size. We are in a smaller ticket size. NBFCs, any NBFC who's done well are the NBFCs who remain to be more granular in terms of ticket size. More deeper and deeper they have been able to go to tier two and tier three. Has made NBFC successful. So we stick to that line. Less than 30 lakhs is what we intend to do. This sector is growing very rapidly. So the market itself is growing very rapidly. We are very small as of now. So room of growth is not a challenge at all. What is more important here in this sector is to look at the credit and to spot the right customers where the credit quality is good. What we believe in is the total delinquency. So the total delinquency as of now, as of March, is about 5%. We believe that if you are able to control total delinquency over the long period of time, I think then obviously one of the GNPA will be in control automatically because the overall delinquency is in control. But I think from a growth point of view, it is not a challenge. I think the challenge only is to keep the overall delinquency in shape and control. Pankaj, would you like to add something?
Yeah, so from a segment standpoint, if you look at MSME is a very large segment. We have more than 64 million registered MSME. Only 8% of them get for access to formal credit. So large population today is getting served through informal channels, and they're not able to come to the formal forte. So our endeavor has been to serve this population with a pan-India network and approach. And for that, and it's a very underserved segment, very difficult in to assess because they don't show much on paper. So it's very local level assessment which you have to do. So we have a team down at local level to go meet customers, understand customer cash flow, do all the ref checks, and basis that typically one would assess this customer segment. And over a period of last 6 years, we have created a very good, robust credit underwriting model for us to filter the good credit versus let's say not so good credit, which helps us in building this model. And now we believe that we have created this model which can help us to grow the business with, because the opportunity is very large, and deliver the credit outcome and maintain our credit cost in the
Pankaj, just jumping in between, is this something which is like proprietary, like algorithmic models or proprietary analytical models which you have developed internally?
Yeah, so what we have done is based on our experience, we have created a grading model which grades the customer, and it's an analytical model, and you're right, and it's a proprietary in nature. So based on our experience and credit performance, this model grades customer into 5 category, grade 1 to grade 5. So the grade 1 being the best in terms of credit outcome, grade 5 being the worst. So incrementally, we have stopped doing grade 5, and we are moving our acquisition more towards the better grade, which is in grade 1 and 2.
Okay, this sounds good. Let's build it further for our viewers. From this perspective, I was looking into the DRHP, and it came out. One is one is secured lending. Second, basically, is loan against the gold, and then there is another distant part which is the unsecured lending. But when it comes to the breakup between these three types of business, what is sort of revenue breakup or the dispersal breakup between these three categories?
So on the disbursement side, we've discontinued unsecured. But as a strategy, we are focusing on the secured part of it, the lending. So largely on the disbursement side now it is MSME, secured MSME, and loan against gold. So around 80% plus would be let's say MSME, and around 15 to 20% would be gold from an acquisition standpoint.
Okay, and right now, which geographies SBFC is largely can say that that's its strength?
So one of the thing which we did very differently from our other peers, and so we are the only pan India MSME focused secured lender today. We are present in 16 states, in 2 union territories, and we, as a strategy, we don't allow one state to cross a particular threshold in terms of concentration. So for the single largest state in terms of AUM contribution is Karnataka right now for us, which is at 17%. And there are other states now which are building up. There are a few states which started later in the journey from organization standpoint. So from a disbursement standpoint, we are seeing a lot of states which are now increasing the disbursement momentum, and their contribution in terms of overall AUM size, which is improving. And the endeavor is that we build these states, go deeper. Today we are only covering 25% of the districts in each of these states, and so which gives us a good runway of growth from a long-term standpoint. So even if we cover some of the other districts, we can go deeper in each of these states.
So Piyush, very early on, some of the decisions are required to be taken in the organization. One is you talk about the product, so SME is very important, and we said we would like to stick there. The other important thing is distribution. It is very difficult to migrate from a regional player to a national player. You will not see many examples of whether it is NBFC or beyond NBFC as well. Very seldom a company is able to make themselves from a regional player to a national player because there are certain inherent issues you need to address. If you want to become a national player, obviously the reliance on process, system, credit culture becomes important. So a file underwritten, let's say in Bihar versus a one written in UP versus one written in Maharashtra, all have to have a different set of people, but the similar processes. And so the culture, which is very important here, the process and the system, which is very important here, is actually built on in very early on in the organization. It is very difficult to really get some of these softer aspects of the organization later, and so one actually can't handle it later. So we actually choose to be in that path of becoming a pan-India player. The advantage is many. So advantage one is the growth. Obviously, then you are talking about 16 states, or you one can actually start going deeper and deeper into every state. The second, I think, is the learning curve. Every state in India is very different and unique. The industry segments are different, the behavior patterns are different. And so always takes some time, a little bit of more effort to really understand the market, understand what is right and what is not right, and what should be the credit writing processes and techniques there. Early on, again, if you get into the learning curve, then what you're also doing is making some of these learning very fast on into the organization's way of doing things. So that also creates a better runway of growth as you go along in future. The third, I think, is the credit diversification. Whatever we do, we are finally in the business of underwriting risk, right? More and more you diversify based on granular ticket size, you take lower risk. And the other is the geographical diversification. More and more you diversify geographically because geography also brings in a lot of risk. The risk can come from political situation, from economic situation, some industry situation. So the better it is that you are diversified also from a geography point of view.
Right. So, Narendra, I have a follow-up question here. When you were telling me, and I was thinking from a viewer's perspective, two questions emerge out. Number one is how you're able to do that, because then you're able to envisage the moat in the business model. Is it a more digital delivery model, or already the branches are penetrated? How you're able to actually do this business in 16 states?
Yes. So before I answer this, the one of the biggest problem of this model is actually the Opex. What you do is you actually invest so much in Opex, creating those infrastructure,
That,
and
that,
then creating
that was my
those.
second question. And you're already covering now. So, yes, please continue.
Yes. So, but it is sometimes good to build the complete organization, whether it's a distribution infrastructure or also every function you need, right? For instance, collection to credit to operations to HR to every function you need, or internal audit to manage those size of operation and scale of operation, right? So it means inherently what you do is you end up starting high on OPEX, right? But it has an advantage because what you're doing is OPEX is a function of size of business, and as you gain size, OPEX as a percentage of AUM will always tend to be lower, right, over the period of time. So just to complete the question on OPEX first, if you see 3 years back, the OPEX as a percentage of AUM was, let's say, 6.6. In FY23, it has come down to 5.7. And as we go along in future, obviously the OPEX as a percentage will become better and better. We are dealing in a long tenure assets, and the advantage of long tenure assets is largely the cost of operation is very high in the year of disbursement, right? But then the economies of scale start kicking in from the year two itself, and then so one start getting the benefits of Opex. The other way of looking at it is the same branch growth. So you have invested in a branch, whether the same store sales growth, that's a kind of term used for retail, but I like that term very well. So we also look at in the same way whether the SSSG growth is good or bad. I think if SSSG growth continues to be good, then by nature of that word itself, you should get an OPEX which is better and better by as you go along in future. Now, your first question was on how do we underwrite the digital versus physical. So see, all the from a origination side to credit to operations, wherever we can use digital, we are using it. Origination happens physically. We don't use digital medium to originate, but the credit underwriting process is all digital. So starting from a CIBIL score all the way to many other processes around credit to where the file moves into the organization is all digital. The operations are all digital. Collections also, because of all the digital initiative government has taken. Cash collections are reducing a lot in the business. People are very comfortable using payment gateways and making the payment. And so that is a new arena which is coming in, that more and more money is coming through digital gateways. So centrally a team sits out in a centrally in Thane and calls the customer and the money just flows in, or you send a Bitly link or something and the money comes in. So a lot of things are becoming digital, but at
Sure.
the same time we believe that our model is actually physical. So for instance, meeting with customer is very important to understand the credit worthiness of that customer. A lot of things data and document will show, but a lot of things you get to know only when you meet people, right? When you
Of
meet the
course.
family, you understand the culture going on in the family. What is the kind of, a lot of things you understand if you go and meet their neighbors, or if there's a guy who is having a shop, you will actually know a lot from the neighbor of that shop, right? So this feel will come only if you go. One has to go and meet the customer. So we have almost about three different team of people who goes and meet the customer, which is the origination team, the credit team, and the operations team. And so that is a very important element in credit underwriting process. The second part where the physical comes in is the property valuation, property verification. We are dealing with mortgage properties, and so there is a limitation where the digitization can be done. All of these are actually still done on a physical basis, and so there is an element of physical there. When I come to collection, though a lot of collections happen digitally, but when the customer moves to a soft bucket, to a hard bucket, to legal, all of these then start happening to a physical form. So it's a kind of combination between the digital and physical. Obviously digital, more and more digital you do, more and more economies of scale and efficiencies and lower Opex comes in the organization.
Sure. Sure. Let's now talk about the margins here. NIMs around 9%. Todd, is that something which you believe is going to be maintained
I think
or easy to maintain?
so NIM is a function of leverage. The lower the leverage is, the higher the NIMs are. Higher the leverage is, lower the NIMs are. So the best way of looking at it is to look at the spread, which is a difference between the lending rate versus the cost of borrowing. So if you see, we have last 18 months, the interest rate cycle has been very sharp. The repo moved up from 4% to 6.5%. Consequent to that, the MCL has moved up by almost about 150 to 180 basis point. So what has happened to our spreads? So the spreads are constant. We maintained a spread which is 7%. In FY23, the spreads have moved up to almost about 7.7%, however. But the idea is to really hold the spread of 7% independent or irrespective of whether the interest rates are going up or going down.
So 7% is good spread. That is something which is going to be maintained.
Yes. So I think if you see the data in FY22, FY23, the FY23 spreads are higher than FY22.
Okay, fine. And also from the perspective of disbursement growth, we have seen some good solid disbursement growth. Is this something basically with respect to the size and everything and the trends which you are looking right now? Is that something which the company is quite comfortable with?
So on the disbursement side, we are very comfortable with the absolute value growth which we are seeing, while percentages are looking high because of the lower base and the years where
Yes.
we had COVID impact. But from here on a quarter-on-quarter basis, we from an absolute value sense, we are comfortable in terms of growth. As we were talking that the opportunity size is very large. At a state level, we have a lot of room right now for us to grow. There are a lot of branches which have not come to a level at which we want. As Narayan was talking, the same store growth or AUM per branch is metric which we drive.
That's the most important point. Could you just specify like what sort of percentage of branches are at nascent stage? Because it happens with every banking business. You establish a branch, there is a particular break-even period. After that, basically the sort of optimum business starts coming in, and then actually the margins start lifting up. So any idea what the percentage of those new branches are there right now?
See, so 15 branches approximately we opened last quarter. So obviously they are new branches. If you look at, there are 87 branches typically which have crossed more than 36 months and are at average AUM of 32 crores. There are then branches which are at average of 25 crores, and then some branches which are at 20 odd crores. So if you look at typically in 3 years is where we see branches delivering the size and a potential number which gives us the desired profitability outcome, and that's when we start looking at the new branch opening from a state standpoint. So basis that we believe there is enough runway of growth available for us in each of these states where we are present. So from a growth standpoint, we don't seem to be having any challenge. There are 3 key parameters which we are very particular about, which we as an organization and as a team we have to ensure is the cost of credit, cost of operations, and cost of finance. If these are the 3 levers which as an organization we have to ensure that we control and maintain that to our desired outcomes, and if we do that, then we believe that growth should not be a challenge.
So there are 3 levers of growth. One lever of growth is the market itself. So one is whether the market gives enough opportunity for growth. The second, I think, is the geographical districts, etc. we are present. So we are not even covering 40% of the district in the states we are into. So obviously, as you go along in future, you will continue to open new branches. We don't believe in rampant increase in branch. So what we will do is, this is going to be moderate. Every year you open some 15 odd branch, let's say, some few numbers here and there, and you keep on. So we are 150 branch. So 15, if you add, then it's a 10% growth should come from new branch. But I think the most important also is the same branch where we have opened in some district, how it is performing and whether it is able to give us a growth. So I think all 3 put together, we are still very early in our journey, and so growth is not a big challenge.
Well, this sounds good. In a market like India, there is never a shortage of growth, and I think customers will keep increasing as your branches will keep tapping new customers. I think it will boil down to only 2 things. One is your proprietary analytical platform, how well actually is keeping the risk management in check. And the second is how the market forces actually are helping you on your margins. And perhaps these 2 are something which our viewers, our investors, they will keep tracking you on. But it looks like a very promising, exciting story, a national player now actually coming to get listed on the bourses. So from our side, all the best wishes to you for your listed journey. And thank you to both of you for coming on our show.
Thank you.
Thank you, Piyush. Thank you.
And dear viewers, here was SBFC Finance. Look forward towards the IPO. But for this show, for now, it's a wrap on the show. Hope you enjoyed it.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.